if we're going from $2.5 trillion to $100 trillion, why the fuck would you ever sell anything? I mean, that's what I keep getting into my head is like, unless you have to or want to, you literally wouldn't. The US liquidity chart. I mean, it's like, it's fucking perfect. So, that seems to be playing out as expected. The liquidity flow is happening. It's all on track for what we expect. I still think crypto will outperform tech stocks at the next phase of the cycle.
The world spent the past 2 years teaching AI to think. The next 20 years will be spent teaching it to see, move, and build. Every step requires hardware the world has not yet manufactured. Energy, the grids have not been generated yet, and the rails in the financial system has not yet deployed. Every step is investable. This is not the late stage of an old cycle. It's the early stage of a new one, and the build out has only begun. Welcome to the exponential age.
Raoul Pal just said crypto is going to outperform tech stocks. Not as a hope, not as a maybe, as a call. And then he said we're going from $2.5 trillion to $100 trillion, and asked why you'd ever sell anything in between. That's not hype. That's a man who called the exponential age in 2021 when everyone thought he was crazy, and has been putting out specific, falsifiable framework ever since. So what's the actual case? Why does he think crypto wins from here? And what does a $100 trillion crypto market even require to be true? That's what this video is about. Raoul and his co-analyst Julian sat down for one of their raw, unscripted sessions, the kind they usually keep behind a paywall, and they walk through the full picture. Charts, data, liquidity flows, the macro setup, and the thesis that the entire financial system is about to be rebuilt on crypto rails. There are 3 sections you need to hear. First, the crypto outperformance call and the specific assets they're watching right now. Second, the supercycle case, why they think this bull market doesn't end the way previous ones did. And third, the framework underneath all of it, what Raoul calls the universal code, which is either the most important macro lens you've never heard of, or something that's about to completely change how you think about every investment you own. You just heard the conclusion. Now here's how they get there.
I still think crypto will outperform tech stocks at the next phase of the cycle. So I think that's pretty good. I won't go through most of these. The other chart I'm very closely following is Zcash, which has been a great one. And I think somewhere here, we're going to be doing another one of these kind of inverse head and shoulders continuation patterns. It comes down, breaks through, next phase of acceleration. So I kind of like that one as well. Going back to stocks, as you said, I mean, Tesla's now, let's look at the weekly to give it some perspective. I mean, this wedge is going to break.
Yeah.
And when this wedge breaks, nobody's really prepared for this. And I still think fundamentally it's amazing. Rocket Labs has been fucking rocket ship. And look, I get this is a very overvalued stock versus its revenues. But before the SpaceX IPO, the only way of playing the SpaceX IPO is owning this stock. And if I look at this rising wedge, if it breaks the top of this, which it looks like it's going to do, it's just going to go vertical for a while. And then I think we'll take profits into that because, it's not making a lot of revenue right now. It's still losing money, everything else, I get it. And the SpaceX IPO will satiate the demand for, space stocks. But this is the play. And I think it's going to go vertical.
The thing about that chart, though, that's crazy, I just pulled up the GMI portfolio. We added Rocket Labs at like $7 originally.
Yeah.
And then it did a 300%. Then we sold it and then we bought it back at $18. And now it's up that position's up 600%.
I get the new position.
The new position.
Yeah. So I don't know how much fucking money we've made in that, but it's been preposterous. I don't know. I don't think we've got it in Pro anymore, boy. But we probably got it in Exponentialist.
Yeah, no, I don't think we have it in Pro.
So, okay, I mean, that's been a killer. Obviously, Nvidia exploding again. It helps Jensen's in China. Clearly, he's going to be allowed to sell Nvidia chips to China. On what terms? We don't know.
And when you look at this chart, I mean, if assuming that we're right, assuming the compute cycle article's right, I mean, the move has just started.
It's just one of the wildest charts in history.
I mean, wow. I mean, had you bought that back in 2012?
Yeah.
What a move.
Then, Intel has been doing, I mean, that chart was la la land as well. Oracle, I think everyone's going to be wrong on Oracle. Oracle's probably going to go back to the new all-time highs. Semis, you showed TAN, Circle, good. HIMS still really like this stock. I think people are still wildly underestimating the size of the market in personalized medicine and these compounding clinics and the technology that they've got and the sheer size of the peptides market. So, yeah, it came down on earnings. I think it finds a base somewhere here. And as it goes through, we'll form an inverse head and shoulders, and this thing's going to be exploding higher. So I really like HIMS as well.
The DMARC wave count just opened up a new wave higher now that we've come lower as well. So on Bloomberg. So
eToro, we don't have, but we had Yoni Asser on recently. Lovely inverse head and shoulders low.
No, I mean, I agree with everything you said. I touch on small bits of it within MIT, but obviously we wrote a really big piece about this in GMI. The thing that yesterday during an IC call, one of the questions was, where are we in the cycle? Are we late or early? And I said mid, but I think what's interesting is if we're right about oil and if we're right about the dollar, all of a sudden we're in a situation where we have like almost a new breath, right, of where financial conditions extend the cycle even further into next year.
And I'm going to write this up in GMI, and you did a whole piece on this last month, is that the probability of a super cycle is getting reasonably high now because of this massive capex spend that cannot stop. The race with China is on. The administration wants this to happen. They need it for votes and everything else. So they will push for this whole thing. Liquidity looks like it'll come in any way, shape, or form. Now, because bill issuance is the main part of the liquidity cycle, we're actually losing cyclicality because of it. Even though we've got the big debt rollovers, but we've got 9 trillion to do this year, 10 trillion next year. It's like it's ongoing. So the point you and I have been talking about for maybe a year and a half, maybe 2 years, is we thought that after this cycle would be a super cycle. And now we're kind of starting to think, you know what, maybe we don't get a full liquidity down cycle here. Sure, we'll get market corrections, we'll get sideways trends for 6 months, whatever it is. But really speaking, we could see an extended, extremely hot business cycle that runs. And the only thing that would null and void that is if the bond market says no fucking way, which is why Besant is over in China and Japan, trying to stop that happening by getting more buyers at the long end. So it's kind of anything over like 5.5% of 10-year notes, you start to say, okay, this could decouple. But we also know the reaction function is the moment that happens, they do something. So it's kind of, they don't want it to happen. They'll use some vague form of yield curve control to keep this happening. So I kind of am erring towards the super cycle, which is the dangerous thing, because somebody on here is going to say, after we have some liquidity cycle, you said it was a super cycle. I'm not. I'm saying probabilistically it's increasing. And you think that as well, right?
Yeah, I do think that. I mean, that was the compute cycle article from GMI, right? And I also talked a little bit about that in the MIT video. It's just to the extent that now everything is downstream to compute. So AI has flipped causality. Now, everything used to follow the ISM because people would say, well, new orders are ticking higher, expectations are improving, and therefore semiconductors followed the real world production cycle. That's now changed. And then you have everything that we've discussed, like the Red Queen, which I talked about in my last video, but it's all these things coming together and the charts as well. So that's the point, is like there's inflation wasn't nearly as bad as it was made out to be over the last 2 days, which is why on the PPI print, again, I talk about this in MIT, you saw the market come lower, but the 1 year break even didn't move. The forward curve pricing for Fed rate hikes last year actually flattened and equities closed at all-time highs So it's telling you that inflation's not a problem. And then even then, the 5-year break even hasn't moved at all. So the market's just priced in as a supply driven oil shock, which the Fed should therefore look through. And I'll talk about Warsh in the same way that you do in my latest MIT. But it just feels like it's kind of all coming together, which was highly out of consensus heading into this year, right? And the build out has only begun. Welcome to the exponential age.
Exactly. And what we're doing is fully transitioning between the exponential age, which is the acceleration phase where technology starts compounding, into the economic singularity. This is the move we're making right now, where the old rails are no longer fit for silicon-based speed. Right? Don't forget, silicon processes 1 million times faster. That's 6 orders of magnitude faster than the human neuron. Nothing is set up for this. And we have to rebuild everything from scratch. And that is what's underway. This is the biggest phase, transition shift humanity's ever faced. And the whole thesis of don't fuck this up is you just keep hold of this trade in every guise that you've got it and ride the fucking thing.
Yeah, and it's not just to the point of this the CapEx super cycle, which we've been outlining and talking about really for over a year now, which is kind of coming into focus with semis up now 80% year on year. But it's also that another thing I wrote about in the article is we're going to go through the largest immigration event in human history. Only it's not humans, it's agents and robots. Yeah. And again, none of that infrastructure has really been built out. It's being built out now.
That's right. And we're going to shift from the magic formula of GDP equals population growth plus debt growth plus productivity growth into the economic singularity version, which is AI plus robots plus humans. And productivity is how much intelligence you can produce per unit of energy.
Yeah.
And then debt will get eroded away because GDP growth
so strong
will be so strong and inflation will be very subdued over the period of time that when you look back like the 1950s and 60s, you ended up going from 120% of debt to GDP down to about 10. And we'll do the same all over again.
And no one's, I haven't spoken to anybody who's thinking like that.
No. But it's fucking obvious. And I keep saying these things now. It's like all of this is so fucking obvious and it's falsifiable and it is literally the whole framework is not putting a foot wrong on these big, broad concepts. Sure, wiggles here and there, but it is happening. It is happening at scale. And this whole funneling of the entire focus of the world is moving towards intelligence per unit of energy. And that's the entire game.
Yeah, we're leaving a world that's been dependent on capital and labor and moving into a world that's entirely dependent on compute and energy. And that's a very different world.
And both of them are in Wright's law. This is what people understand because they look at the oil price. But Wright's law, if you look at the price of solar, wind, geothermal, everything, I mean, these things are down 99.9%. Compute is doing the same. On top of Moore's law, it's like, so you've got both sides of the equation seeing exploding productivity. And therefore, the intelligent side of the equation is accelerating. And this is the thing people don't understand, because normally they're kind of fixed-ish. You can build a certain amount of factories per, joule of energy. But when you're building intelligence, the fucking thing is moving at Reed's law, which is Metcalfe's law squared. And we're seeing it. Every chart is doing this. Never in humanity has Reed's law ever been witnessed at scale. And it's being witnessed in almost everything I look at right now.
So here's where we are. Raoul's framework is not a price prediction. It's a structural argument. And the structure is this. The world is converting energy into intelligence at a rate that has never happened before. And crypto is the financial rail that this new economy runs on. Bitcoin added in June 2020 is up 900% in their portfolio. Ethereum, same. Circle added at $56 is up over 100%. And they think it's still not pricing in the stablecoin growth coming. Solana up 200% since they added it.
These are not lottery tickets. They're positions in the infrastructure layer of what Raoul is calling the economic singularity. His term for the point around 2030 where the old frameworks for how GDP, inflation, and debt interact simply stop working. The bond market is the one thing that could disrupt the timeline. Raoul's level is 5 to 5.5% on the 10-year. Above that, you start asking questions. But his base case is that Besant is already working to prevent that, buying long-end demand from China, Japan, South Korea, and using stablecoins to finance the deficit on the short end. The Clarity Act is crossing the line. The Fed chair is a tech accelerationist. The entire Trump administration was, in Raoul's words, chosen by the accelerationists. Everything is pointing the same direction. His call is simple. Crypto outperforms tech stocks at the next phase of the cycle. Not eventually, at the next phase. And if you believe the $2.5 trillion market is heading to $100 trillion, the only question worth asking isn't when to sell, it's whether you have enough. If this video made you think differently about where we are in the cycle, hit subscribe. We cover serious macro and crypto analysis every week, built around the sharpest voices in the space. Raoul and Julian's full research lives at Real Vision. Link is in the description. We'll see you in the next one.